360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick DeCatt will take us through the charts as always. Here to take us through the trades today, Jason Brown, stock market expert at thebrownreport.com and the author of 5-Year Millionaire. Great to have you both with us today. Jason, would love to get your thoughts on this mixed market we're seeing today. We heard from NVIDIA. NVIDIA is lower. We finally got confirmation that SpaceX is coming to the market. What are your thoughts right now?
When the market's at all-time highs like this and you have these run-ups before the earnings, I'm not surprised that the market's pulling back a little bit. NVIDIA delivered, but that was already baked in before the earnings report. So to me, it was kind of written on the walls that the market would pull back. And it just makes sense to take a breather right here. We've been on a little bit of a tear. So as always, at these levels, I'm cautiously bullish. I think long-term we go higher, but these little resets are definitely in order to keep the market in check and keep everyone from getting over exuberant.
Yeah, I had several guests say to me they thought sell in May and go away might come after we heard from NVIDIA. So perhaps the beginning of seeing some of that. But this first name you've picked here, Goldman Sachs, I was talking about a lot yesterday afternoon after we finally got that prospectus from SpaceX, because they are leading the underwriting process and also reportedly leading the process for OpenAI. So does that come into why they're in the big three today?
Yeah, absolutely. Well, technically, first, the chart comes into play, which I know Rick will go through, but Goldman Sachs has been in a nice uptrend. I always like to look at earnings for these companies, and you can see their global banking and markets revenue showed about 48% growth in the recent quarter. So you like to see that. Their fixed income currencies and commodities revenue was down, but I think that makes sense that it's a little bit down. They're not writing government bonds and different things like that. That's not the space. But speaking of space, when you think of SpaceX, it's not so much that they're the lead underwriter for SpaceX. I mean, that's good news. But what it's signaling is that the IPO market may be open and some new companies may be coming public. And so there's a window where there may be a tailwind of other companies, like you mentioned, potentially OpenAI, and who knows who else may come to the public markets, and they make all the fees off of that by being the underwriter. And plus all the people that are going to start trading these stocks on these different platforms now. So it's a huge opportunity.
Yes, certainly is. Anthropic, probably the third name in that little triangle of IPOs that we should be tossing in as a potential candidate there. But Rick, as we look at Goldman Sachs, I mean, year to date, not the most impressive growth. We're up a little bit north of 10%, but the last 52 weeks, we're up more than 60%. What are you seeing when you look at the technicals?
Yeah, Marley, it looks like a rising wedge type of pattern that I see shaping up here. So we hit those highs agonizingly close to an even 1,999.50, and that matches up with the, at least in terms of where we opened up today. We made some intraday highs beyond it, but you can see that red line, 975.30, was an old high point that we saw after our last earnings event from January there. So now we can see that with that, we have our rising wedge type shape, 2 trend lines, both pointing upward, both converging toward each other. The top one a bit more modestly sloping. Typically, this is regarded as a bit more of a bearish setup here, but really it's not written in stone by any means here. It can go either way. What you'd be looking for with this type of pattern, though, is a breakout beyond either of those 2 trend lines. So if you do have more of an upside bias here, the trend line coincides roughly with that old resistance level. If you're looking more toward the downside, supportive areas could possibly include 921, our first green line, and then 900. Both of those match up with some notable low points that we saw recently here. So if we advance our chart, then we can see next our moving averages that we follow. We are above all of them. They're diverging farther apart from each other. We're not seeing really any signs of potential trend interruption just yet here. Our teal 21-day EMA lines up with our trend line at about 939 roughly, so that's another noteworthy place for potential confluences to form here. We can also see our RSI study, our measure of momentum, showing a little bit of bearish divergence here, trending downward even as price makes higher closes. So we are still in the bullish side of the spectrum here, but the bulls would want to see a breakout above that downward sloping red trend line to invalidate consolidate some of that bearish divergence here. Volume profile shows that we have a large node that contains our point of control, the area of heaviest trading of all that thick red line there. That comes in at about 931 roughly. The node itself, 885 to about 950. That's the zone of interest here. That's the potential consolidative range to the downside overall that you'd be looking for, Marley.
All right, Jason, and as you look to trade Goldman Sachs for example purposes, how would you structure a trade here?
Yeah, a couple of things too I want to bring up. If you go back to 2025, you'll kind of see this cup and handle pattern, and we're kind of coming out of a similar pattern with that cup and handle, like at the bottom of Rick's uptrend and support. So I'm definitely cautious around the 980. I want to see it break above there, but if it breaks above there, you can see from last time we had a good 500-point run. And so the way I'm looking at this, long call options, I would only take half my position here again, because you're kind of taking it up against potential resistance, but I still think the stock can break through it. June 17th, 2027 expiration, the 980 strike price is costing you 140 per contract or 14,000. Now think about this. If you wanted to buy 100 shares of the stock, you'd need $98,000. So to control it for about $14,000, in my opinion, is a deal. Your break even's around 1120. You got 300 and about 92 days on the time frame for this. So you got plenty of time for the stock to move higher. Again, at that price point, how else would you want to get involved with a stock like Goldman Sachs? 14,000, uptrending, long term, you got time on it. That's the trade I see. If for some reason we start to go downward, you could always sell a covered call against it just to kind of limit your risk in this trade.
All right, $140 debit trade. I love it. We're spending today. All right, let's move to our next one. We're talking about Teradyne here. They had quite a bit of momentum coming into March, and then I'm looking and I'm seeing a lot of volatility here after that. So why Teradyne?
Yeah, so Teradyne is a picks and shovel play in the AI space. I mean, you're starting to see this happen over and over again. You get companies like NVIDIA announce great earnings, the stock still sells off, and you're like, what gives it? It's time to start to look at what are the other beneficiaries of AI, and you got to think about Teradyne like this. They don't make the chips, but they make sure the chips actually work. So think about AI build out meets quality control. A lot of companies are putting money into these data centers, these chips. There is a lot riding on these if the chips are bad, if they malfunction, with all the people that are starting to believe in the AI story as far as moving their stuff to the cloud, having it do their computing, having it not hallucinate and give them the right data back. But if it doesn't even work, it can't even hallucinate. So you definitely need quality control, almost like automobile manufacturing. As I sit here in Detroit and think about that, it makes so much sense to me. Their revenue was up 1.28 billion. 87% year over year, and then get this, Marley, 1.1 billion came from semiconductor tests. So they're not hiding the fact that a lot of their growth is tied to data centers and semiconductors. But I think the question we have to ask ourselves as traders is, are we at the beginning or are we at the end of the AI infrastructure and semiconductor boom? And I would say we're still in the early stages. And so that means there's a lot of growth left still to be had from this company.
I have yet to have a single guest say to me that we are in the end stages. So I get early innings, early stages, whatever analogy you want to use. I hear early repeatedly. But Rick, as we look at the technical setup for Teradyne here, what are you seeing?
Well, very strong price activity that we saw heading into that last earnings event that took place in the end of April. Then the balloon got popped a little bit here. We saw a pretty sharp decline from there. We bottomed out around that 300 level, 301 roughly. From there, that meant we did fill that gap that formed a bit earlier in March. Now we have more of a downward sloping trend line, our blue line there, that has been breached at this point by today's price activity. So kind of an interesting setup here. Our white trend line going across those lows is still in play here. So some potential resistance areas come in first, 353. That's a small gap that formed about a week ago. We are on pace to close that gap today. Beyond that, we've got our relative highs near 385, and then those 52-week highs, 422.11. 327. To the downside, old high, subsequent low after a big gap up that I described earlier near 344, and then the beginning of that same gap, 321, and then the lows near 300 that we addressed earlier. So in this case, we have our moving averages. They're trending upward now, but we had a bit of a pullback here. Now price pretty quickly fell through three of the shorter term ones that we follow here: 5-day, 21-day, 63-day, weekly, monthly, quarterly, respectively here. Now, just as rapidly, we've pushed back above all three of them within the past few days. We are crossing above the 21-day EMA in teal. That comes in near 350 right now, so that's the closest one to our current activity. Notice as well that RSI was forming a triangular type shape there. We have crossed above our downward sloping trend line. We've also crossed above the 50 midline, so some bullish signals there developing as well. Finally, volume profile shows that we have two nodes to consider that are near our current price activity: 295 to 320 and about 340 to 370. You can see those highlighted areas there. So we crossed into that lower one. We seem to have bounced. Now we're in the thick of the upper one here. So a breakout above 370 is where the trading really starts to thin out. You could see prices starting to accelerate beyond that level, Marley.
All right, Jason, and as we look at Teradyne, I know you're bullish here and you like to give yourself the gift of duration. Are you giving yourself the gift of duration on this example trade?
I am always giving myself the gift of time on these options trade. As a trader, you do not want to get caught running out of time on these. And so, Rick said something very important. He said the balloon popped, which is true, and the stock pulled back. But as a trader, you got to remember that's good news, because it pulled back roughly to that uptrending line that he drew, which lets you know that you're not buying it at all-time highs. You're technically buying it or taking an entry right around support, which is why I like this one. I'm looking at the strategy going out to January 15th, 2027. The 300 strike price option is a $100 debit. What I like about this is the break even is 400, but the stock went as high as 420. I always like a trade where the stock doesn't have to be perfect for me to make money. It doesn't have to go back to the all-time highs and pass it. It can go $20 below it. We'd break even on the intrinsic value, and then the extrinsic, if there's time left, should put us right there in the profit. Like I said, you got 239 days on that trade. So I like it right here, right now for entry. It's up 2% today, or almost $8 on the day. I like it right here, right now.
All right, and we like it right here, right now for Teradyne. We're up 2.5% right now, 352.06 for Teradyne, bucking the trend in the overall market here. But your last pick, Dollar Tree, a very, very different space. I like that we're sort of all over in terms of the sectors today. Jason, why Dollar Tree for the big three today?
Before I do Dollar Tree, I did want to say my I'm wrong level on Teradyne is 300. I always like to give an I'm wrong level. As a trader, you should be looking at, if this goes against me, where I would get out. Teradyne, 300, it breaks that, game over. We take the small loss. Dollar Tree, here's how I'm looking at Dollar Tree. They're the value retailer with a low-income customer tailwind. You got to think gas prices are high. People have to be thinking about where they can go to save money. Dollar Tree is that answer. If you looked at what happened with Target's earnings, Target, kind of surprised to the upside, even though the stock didn't reward it, but traffic was up, which is good news. And then you have Walmart, who reported earnings, who said, in their own words, that the customers are looking for value. The customers choosing value right now. And so if that is true, if traffic is up, if the customers are looking for value, and then you got rising gas prices, so people are looking to offset some costs, I think Dollar Tree is going to be a winner when you come into that earnings report. So that's why I like it right here, right now. It's also roughly 30% off the most recent highs and 52% off the 52-week high. So when you look at the $85 level, we're just above that, but that level is support. So you're not buying it at the high. You're getting it for about 38 to 52% off, depending on what resistance level you're looking at. And then when I get into the strategy portion of it, I think it's a can't lose strategy as we go into earnings, but that's why I like this one. It's also just a diversity play away from tech as well.
And Rick, as we look at the technicals on Dollar Tree, I mean, we know last year these names were performing really well, but we've got a lot of pressure on the lower end consumer with the setup we have right now. And I'm seeing it reflected in the chart. So, take us through the technicals and what levels you're focused on.
Right. So one thing I want to point out real quick is there's an interesting example of a head and shoulders type pattern here. Just for the sake of reference, we can see that our white trend line near 118 marks some significant old highs. Then we saw our first shoulder develop in December. Our head came in at the 52-week highs near 142. And then our second shoulder came in during February. And this is more of a bearish setup. So we did get that eventual breakdown below the white neckline there. And again, these patterns, they're not a crystal ball. I really want to stress that here. This is just a trading setup that describes price activity that traders are on the lookout for because it suggests a significant supportive area that could be breached, and then you could see the breakout price activity. In this case, as I said, it did translate to the downside. Now we have kind of the mirror image of the very first pattern I talked about in our first chart, a falling wedge type shape in this case, where our two trend lines are pointing downward and converging toward each other. Again, breaking out to the upside here, so some horizontal levels to consider. First, to the downside, a repeated supportive area near 86, which is really standing out to me because we've tested it several times here and it's held firm and we're getting a bounce once again. So next, to the upside, the 98 level, our first red line, low point, subsequent high point that was retested. We had a failure. So that would be one area that traders might have their eye on close to where we are now. Beyond that, 104, old lows, the beginning of a gap, and then another high point that we saw that price failed to take out after some upswings that would eventually did fizzle out. Now in this case, we have our moving averages. They're mostly trending down. Our shortest, fastest 5-day EMA in dark blue starting to trend upward as price overtakes it. We are halted right now around our 21-day monthly EMA in teal near about 94.50. So look for that to be a place where price could break above as well. We have our RSI, our measure of momentum, trending upward there. We have our red downward sloping trend line broken. Look for a cross above that 50 midline as well for further bullish signals. Now when we look at volume profile, heavy volume at these lows kind of lining up with our supportive area is notable to me. The volume is between about 87 to 91, but just above that then there's another heavy trading concentration between about 94 to 102. The point of control comes in at 99, so the bulls would want to break above that 102 level to revisit some of those more range-bound areas that we saw previously in March, Marley.
All right, Jason, as you look to trade Dollar Tree, and interestingly, we've got earnings coming up for Dollar Tree too on the 28th of May. So as you look at trading it, how would you approach a trade here?
So the beautiful thing about options is that you can structure the deal to win if the stock goes up, if it goes sideways, and even if it goes down. And that's what I'm looking at here. This is more of a short-term trade. I'm looking at the June 18th, 2026 85 strike price, selling a covered put, which means you must be willing to buy the stock at 85. But based on the chart, 85 looks like support. It's held that line several different times. Plus that gives us an $8 cushion roughly, so $8 to $9 cushion. So the stock could fall $8 to $9 before we actually have to buy it. And then we take in roughly anywhere between a $2.80 to $3 credit, which means we'll also have another $3 cushion to the downside where we can get out if this, at a break even if the stock does sell off against us. So I like this. I don't think earnings is going to disappoint too bad based on what I saw with Target and based on what I saw with Walmart. But even if it did, $9 cushion plus a $3 credit, which means total $12, stock could fall. You could still get out at break even. But if it goes sideways or up, we keep the $3. We're talking about a 3.5% return in 28 days, which is not bad. Some people put their money in a bank account for 3.5% return over a 12-month period. If you can get it in 28 days, it's not a bad trade.
All right, Jason, I'm not going to let you go without your I'm wrong level because I know you like to share it, and I'm sure you've got it. So.
I do. I have it sitting right here. Well, really, the I'm wrong level is the 85. But so when you're wrong, you're going to buy the stock. Then you got a $3 cushion below that. If we start to break down below $80, so you $2 below the $3 credit that you took in, you might just want to shut this down and take a small loss unless you're willing to own the stock and then turn around and sell covered calls against it.
All right. Well, Jason, really appreciate you bringing these picks for us today for Big Three. Jason Brown from thebrownreport.com. And, of course, Rick DeCatt, our lead market technician, for always breaking down the technicals for us. Coming up next, we are going to spotlight energy.